Max has been an online entrepreneur, trader, portfolio manager that has been transacted more than 80 billion US dollar transactions in global financial market for more than 10 years. Max has been helping top international financial institutions to manage their funds and multiply them. Since a few years ago, Max has been coaching, training and grooming more than 1,000 aspiring entrepreneurs and leaders to build highly profitable portfolio online using the Max Intelligent Growth Strategy. If you know Max personally, you will know that he is not a hyper-excited, raw type of speaker, but more like an introvert, mad scientist that developed powerful processes and systems. Without further ado, let's put our hands together to welcome Max to share his powerful experience so that we can learn from his amazing experience.
Okay. Hello everyone. Max here. Today we are going to talk about how to be a winner in good or bad market. Okay, good and bad market. Okay, many. I have been one of the victim many years ago. Okay, in this as well, because I have certain expectation on the what market should do. Should be uptrend or downtrend. I have a certain preconception about certain market. Okay, and that really hurt me a lot. Okay, I lose a lot of money, and probably you can learn from my lessons rather than go through all the try and error yourself and save all the years of try and error and probably a lot of money. Okay, costly mistakes. Because the market and we have to be we have to know that anything can happen in any market. Okay, be it currency market, be it stock market, or gold or silver, precious metal market, or energy market like crude oil. Okay, anything can happen in any market. So we got to be very open and flexible in this. Okay, in this, that means we have to very flexible in moving our portfolio or shifting our positions. For example, okay, a few months ago, okay, for example, we actually go long on the stock market, right? Okay, the US stock market like S&P 500, Dow Jones Index, Nasdaq 100, and also gold as well. Okay, but last month, for example, we things change. Okay, market come down, right? Market come down, then we move our positions to US dollar index. Yesterday I talked about this as well, US dollar index, and also we to specific buying US dollar, long on US dollar. Okay, it can be US dollar index and it can be US dollar versus specific currency like Japanese yen, Swiss franc, pound, euro, or any other currencies. Okay, so the point is we got to be very flexible in doing this. Okay, rather than have, because certain people may have some fear over on currency market. Okay, they call it forex. Okay, but the currency market, certain people have certain fear on this, and yeah, so it might not be the case if you know what how you can do it. For example, we have been talking about automatically save at least 1,000 or 10% or to 20% of your income in net income. Okay, in every month. Okay, do it monthly or 1,000, be it 100, 1,000 or 10,000. Okay, 10% or 20% of your income. So this is one way. Okay, you can do. Okay, instead of bet everything in one market. Okay, when you, for example, you automatically save 100 or 1,000 every month, then you can adjust every month, right? Okay, that means it can be last month, okay, this 1000 or 100 go into S&P 500. This month maybe this 100 and 1000 go into gold. Another month maybe 100 or 1000 go into the US dollar index, or US dollar versus Japanese yen, etc, etc. Okay, so that means we can keep rebalance our portfolio as well, okay, along the way, like probably every month or even every year or every quarter. So this is how we can do. And today I'm going to show you what is the results. For example, in the most recent month now, until now, in 3 specific portfolio, okay, as an example, just an example. One is US dollar index, and another one is US dollar and Japanese yen, and another one is US dollar and Swiss franc, okay, versus Swiss franc, and make a comparison to illustrate the case. Okay, for example, this one we are talking about this is the we are talking about US dollar and Japanese yen, okay, for example, and you can see that the maximum, okay, for $100, every $100, the net profit is actually $24.25, okay, in the most recent month, okay, most recent 1 month. And you can see that the maximum drawdown, okay, or maximum risk is 10%, okay, $10.12 every $100, like about 10%, okay. So this is $100, okay, and I'm going to show you what if you do it with, let's say, $1,000, okay. Basically it's the same thing, just adjust the contract size or the lot size. The risk is the same, the profit is the same, you just adjust according to your capital size. Okay, and now you can see 1000, right? 1000, your net profit become 240, right? Okay, your risk is the same, you see, 10%, 10.12% maximum risk, okay, 10.12%, okay, for $1,000, but your profit just increase, you increase scale up according to your capital, the size of your capital. Okay, what if you do it with 10,000? It's the same thing. It's the same thing. You basically just adjust accordingly. If this is the risk you acceptable for you, then you just adjust the lot size or the contract size accordingly. Okay, if not, then you're gonna adjust the risk of the contract size versus your capital. This is just one ratio I show you. Okay, this ratio we can adjust the lot size or contract size versus your capital. This is for 10,000. Okay, so you can see that it's the same thing, right? Your net profit become 2,400. Okay, and your risk, you see, maximum risk is the same, 10.12%. Okay, 10.12%. Okay, this is how you can adjust. You basically fix the risk. I mean, make your risk constant by constantly adjust your capital versus your contract size or the lot size. And also the and another later I'm going to show you the market. Okay, different market for different market. And what if your capital is 100,000? Then same thing, you just adjust the lot size or capital size accordingly. Lot size or the contract size according your lot size accordingly. Okay, from here you can see, right, for 100,000, your net profit now is 24,130. Okay, and your risk is almost the same. Okay, maximum risk is almost the same. It's 10.13%. Okay, around 10%. Okay, almost the same. And what if your capital is $1 million? Okay, same thing. You just adjust accordingly. Okay, accordingly the whole thing. Okay, for example. Okay, you can see right here, your capital if is $1 million, your net profit now is 241,300, and your maximum risk is still 10.13%. Okay, this is how you adjust how you adjust accordingly to make sure your risk is always the same. Okay, for the same portfolio, and by adjusting the lot size versus your capital, and get the similar results that you want. Okay, and this is for US dollar, Japanese yen, one of the portfolio. Okay, and now I'm going to show you another portfolio. That means if let's say you have a different pool of money, right? You save and invest on automatically at different point of time. You may just allocate accordingly to different portfolio. Okay, now I'm going to show you maybe US dollar index. Okay, like what we talked about last 2 days. Okay, here you can see, right, for the US dollar index, you can see for every $100, okay, every $100 you invest, for the most recent month, your net profit is actually 57.94. That means $57.94. And the maximum risk is higher, right? Accordingly, the return is higher and the risk is higher as well. Is 35 for every $100 is $35.72. That means it's 35.72%. Okay, maximum risk. Okay, for the most recent month. And you can see that. So you can see that now when you have two portfolio, right? Actually, you average your average risk is about 20%, right? 20%. Okay, from one is 10, one is 30, and now average is 20, right? So you actually reduce your risk for your overall portfolio when you diversify. Okay, when you diversify. Later I will show you another one. When you diversify further, you can reduce further your risk. Okay, so this is for $100. Your net profit is $57.94. That means it's 57.94%. Okay, so what if you scale up further? If let's say your capital size is higher, capital is higher. Let's say your capital now is $1,000 instead of 100. Okay, you same thing. You just adjust your capital the lot size accordingly to 0.1 lot instead of 0.01 lot. Okay, hold on. Okay, 1,000. Okay, here you can see, right, 1,000, your net profit now is $579.40, which is same thing, is 59.94%, and your risk is remain constant, is at 35.72%. The risk is higher, but the return is also higher, okay, for this portfolio. Okay, as compared to just now, right? Just now your risk is 10%, your return is lower as well, right? It is about 20 over percent, right? So this one, okay, what if you have higher capital size? Like for example, you have 10,000 instead of $1,000. Same thing, you adjust your lot size accordingly. Okay, 10,000. Okay, from here you can see, right, for 10,000 your net profit now is 5,794. Okay, and your maximum risk is constant, okay, for this portfolio is 35.72%. Okay, and your profitability is 59.94%, 57.94%. Okay, 5,794. Okay, in short. So what if you have 100,000? Can you scale up further? Okay, let's do it. Okay, I will show you. 100,000. Okay, you just adjust your lot size accordingly. Okay, you can see here, right? For every 100,000, your net profit now is $57,940. Okay, and your risk, you can see maximum risk is remain constant, right? Is at 35.72%. Okay, even though you adjust your lot size higher. Why? Because your capital size also higher, right? Also adjust accordingly. The capital versus the lot size, the ratio, you adjust accordingly. Okay, what if you have $1 million? Okay, let's do it. We will try see whether you can scale up further. Just adjust the $1 million. Okay, just adjust the lot size accordingly. Okay, from here you can see actually because the maximum lot size allowed in this platform, trading platform, or this brokerage is only 50 lot. You cannot put in 100 lots, right? So that means here now you can see that's why you can see that the risk actually reduced. Instead of 50% risk is now your risk is only just now hold on, instead of just I do it show you the previous one for you to see clearly. Okay, sorry. Just instead of 35%, okay, 35.77%, you can see that actually the risk reduced just now is about 30%. Okay, not reduced much, but still reduced, right? Because the lot size not allowed. The lot size is lower versus your capital size. Your capital size, instead of 100,000, just now I increased to $1 million, for example, but the lot size is reduced. Okay, the ratio of lot size versus your capital size is reduced. Okay, of course the profit is reduced as well. Okay, profit is only 180,000 here. Okay, because if the trading platform doesn't allow you to put in higher, this is the maximum lot size you can put. Okay, even for even when you capital become more and more. So this is for US dollar index. Okay, remember just now US dollar versus Japanese yen. If you were to compare to this US dollar index, actually the risk is lower. Okay, but of course the profit also lower, but the risk is lower. So that means you can actually reduce your risk effectively when you diversify to 2 or more portfolio. Okay, now I'm going to show you another portfolio is US dollar versus Swiss franc. Okay, US dollar versus Swiss franc. Same thing. Okay, we start with $100, and the minimum lot size 0.01 lot. Okay, the results you can see. Okay, your profit here for every $100, your profit for the most recent month is $23.49, which is 23.49%. But you can see that here your maximum risk, maximum drawdown is actually 5.07% only. Okay, which is lower than the first two portfolio I show you, right? Okay, one is 30%, one is 10+%. Average is 20%. But if you were to further diversify to this third portfolio, which only give you 5.07% with about 5%, okay, that means you further reduce your risk, okay, to 10%. Just now the average risk is 20%, right? Now your average risk is only 10%, 10+%. Okay, when you reduce further, you can repeat this process to more and more portfolio when along the way when you have more and more money. Okay, that means because you save every month, right? 100 or 1,000 or 10,000 depends on your net income. You save every month and save and invest automatically every month. So you can also diversify to 20, maybe not only 3. You can diversify to 4, 5, 6, 7, 8 portfolio or 10 portfolio. Okay, since you do it automatically, use system to do it automatically, actually you can diversify to 10, 20, even 30 portfolio like this to reduce your risk effectively. Okay, and you can see that here your net profit versus your risk actually is higher. Why? Because here you can see the net profit is actually 23.49%. For every $100 you made $23.49, but your maximum risk is only 5.07%. Okay, it's only 5%, around 5%. Okay, this is for $100. What if you do it with $1,000? Okay, then what will be the results? Now I will show you. If you do it with $1,000, and you just simply you just adjust your lot size accordingly higher, but the ratio of your capital versus your lot size is the same. Okay, you just adjust according to your capital size. Okay, and what is the result? Okay, just now $100, your lot size is 0.01 lot. Now $1,000, your lot size is 0.1 lot. And you can see here your for this US dollar Swiss franc, okay, is your now for every $1,000, your net profit is actually $234.27. Okay, but you can see your risk is the same, right? Remain constant, is only 5.07%. Okay, what if you do it with $10,000? Okay, how to maintain your risk constant at 5.07%? Okay, same thing, you adjust your lot size according to your capital size. $10,000, right? Okay, you adjust according to your capital size. Okay, can you see here, even your capital is 10,000, now your net profit is 2,342, okay, and $6.67, okay, is 23%, but your risk remain constant, right? Your risk, maximum risk, is 5.07%, is still 5.07%, and this due to you diversify into this portfolio, now you effectively reduce the risk of your overall portfolio. Okay, what if you do it with 100,000, 100,000 is the same thing. You adjust your lot size accordingly, the ratio, and you can effectively or successfully maintain the risk, okay, at this low rate of 5%. Okay, you can see here, right? 100,000, for 100,000, your total net profit now is 23,000, right? It's still 23% profit, but your maximum drawdown is the same, remain constant. Is maximum risk is only 5%, still 5%, even though your capital size increase and your net profit increase, okay, to 23,000 now. Okay, what if with $1 million? Okay, let's do it. I will show you. You adjust the lot size accordingly, the ratio, to maintain the risk. At this low rate. Okay, here, because the maximum lot size here allowed is 30 lot, okay, instead of 100 lot, so you can see that the risk is lower, actually is lower on it's not lower, the profit is lower, the risk actually become higher. Let's do it with another platform, because the maximum lot size allowed here is only 30 lot. Now I want to show you how to maintain the risk, and also by adjusting your lot size versus your capital. So you can see here actually different brokerage, like yesterday, what I said yesterday, different brokerage, they have different limitation, so you got to adjust accordingly. Okay, we use back this brokerage and see what is the results. Okay, wait for a while, it process the data. Okay, from here you can see interestingly you can see that in this platform, your net profit for $1 million is still 242,000, which is still about 24%. But now you can see your risk actually lower. Your maximum risk, maximum drawdown become lower. It become 2%. So that means now here, one thing is you can adjust your risk by adjusting your first lesson here. Okay, you can adjust your risk by adjusting the lot size or contract size accordingly to your capital. Okay, this is the first thing. Secondly, you can reduce your risk by diversify to different portfolio. Okay, when you along the way, when you save more and more money automatically every month. Okay, another thing is you can reduce your risk, okay, by diversify to different platform, different trading platform, or to different trade brokerage. Okay, that means still diversification, but now you diversify the timing, the timing you invest. Another thing is you diversify the market. Another thing is you diversify the brokerage or trading platform. Okay, so these are the few things you can diversify to not only reduce but not only maintain but reduce your risk. Okay, and yet still optimize your profitability. Okay, this is the thing I want to show you today. Okay, in order to do this, of course, you got to be open to all brokerage or trading platform, got to be open to all market. Okay, don't restrict yourself to only one or two market, but open up. Okay, open yourself to more market and open yourself to more brokerage instead of restrict yourself to one or two brokerage. This is one of the biggest lesson I have in my earlier years. One of my earlier years in my career. Okay, I restrict myself to one or two brokerage, and in fact I lose a lot of money due to that as well. Okay, if you want to know more, we can talk about this in our next session, in our future session. Okay, if you have any questions, you can leave your leave your questions in the comment. Okay, down below, and I will answer in the next live session, which is we do the live session every day. Okay, and we plan to do this every day, English and Chinese session. You can leave your questions in the comment down below, and also if you want to know more about how to do this, okay, you can click the link below the video in our go to our website and book a consultation call, and we can support you as well in this way. Okay, and yep, so I will see you in the next session, which is tomorrow. Okay, or tomorrow, or the next after tomorrow, the day after tomorrow. So see you. Good luck in your investment and trading. See you.
Are you not satisfied with your current investment portfolio, or even losing money in your investment for quite some time? What if I tell you that we have a scientifically tested and proven AI quant with 99.9% accuracy to improve your return on investment significantly? Do you want to be part of this? MaximaValue is a New York-based international wealth management firm that uses artificial intelligence to invest in global investment market efficiently. This world-class quant algorithm has been tested and proven for more than 10 years, since 2012 with $80 billion transacted volume. We automate investors' wealth by using our AI-powered quant system. It's totally hassle-free and just plug and play and profit. If you want to be part of this revolutionary journey, sign up for our investor club right now to get into the frontier of investment world in this new era of human. Maxima Value, enriching your life.
2000多万美金是一个户口，这样你总共户口加起来是那个数目多少？
可能陆陆续续前前后后啊，加起来可能有3000多万吧。
3000多万美金，哇！